Welcome back, traders. In the previous lectures on this section, you have learned about 3 most strong candlestick pattern in price action chart. Now from this lecture on to the next couple of lectures, you will learn about another strong candlestick pattern, which is the piercing line candlestick pattern. So in this lecture today, you will learn about the formation and basic characteristics of piercing line candlestick pattern. So let's start. When a rally of bearish candlesticks falls down from the top of a price action chart, then the new candle, instead of forming at the current candle's closing price, it opens at few pips below the previous candle's closing by creating price gap, and then the current candle turns into a bullish candle and rises above at least 50% of the previous candle's body, and even the candle get closed by staying above that 50% of the previous candle's body. Then this candlestick pattern is called the bullish piercing line pattern. You will find this candlestick pattern at the bottom of a price action chart. On the same way, when a rally of bullish candlesticks rise up and the current bullish candle close, then instead of the new candle forming at the current candle's closing price, the new candle opens at few pips above the previous candle's closing by creating price gap, and then the candle turns into a bearish candle by falling below at 50% of the previous candle's body, and even the candle get closed by staying below that 50% of the previous candle's body. Then this candlestick pattern is called the bearish piercing line pattern. You will find this candlestick pattern at the top of a price action chart. This bearish piercing line has another name, and that is the dark cloud cover. But I don't like remembering the exact same but opposite candlestick patterns in different names. So if the piercing candle is a bullish candle, then I call that as bullish piercing line pattern. And if the piercing candle is a bearish candle, then I call it the bearish piercing line pattern. It's very easy and simple to remember their names and figures on this way. Now, if a bullish piercing line pattern appears at the bottom of a price action chart, then chances are huge that the market will rise up, since this candlestick pattern tends to act as a trend reversal pattern in a price action chart. On the same way, if a bearish piercing line pattern appears at the top of a price action chart, then the market tends to go down. To analyze the market, this candlestick pattern is one of my most favorite candlestick pattern to trade the forex and stocks as well. So mastering this candlestick pattern will make yourself more experienced and a continuous trade winner whenever you will have this candlestick pattern at the trading points on a price action chart. So that's all for today. In the next lecture, I will explain you about the trader sentiment behind the formation of this candlestick pattern. So we'll see you in the next lecture. Till then, have a nice day and goodbye.